Insurance is one of the biggest expenses in trucking, but are you really covered when it counts? Too many trucking entrepreneurs find out the hard way that their policy has gaps. Tonight, we're breaking it all down with our expert, Tony Dennis, and we're going to be right back right here. Trucking Business Insurance. Are you really covered on Trucking Talks Live? We'll see you guys in just a second.
Paying too much for trucking insurance? What if you could save more by making one simple phone call and keep more profit? You could very well do just that with one simple call to Seabright Agency, 800-366-6466. Call now.
Now here's a question that all owner-operators and small fleet owners should consider. What happens when you access the unrivaled advantages that are available through the ES Advantage program? We asked Jeff and Charley from Contractors Corner to share their thoughts on how they've been able to utilize the discounts and services that are a part of the ES Advantage.
So we started looking for a way to save money on fuel. And we were turned on to the ES Advantage program for fuel first. And so we got a hold of Jeff Reese, and he ran us through that program. And man, we were starting to save. And then we started talking to them. Well, we saw their website and we said, Jeff, what's this thing about insurance and accounting and
right.
You lease trucks? What?
Right. And that's the thing is we only knew it as a fuel card. And when we started digging deeper, I mean, we ended up getting hooked up with an insurance provider, Seabright Agency, and they created an entire insurance program just for us and our people. And from that, we've learned that, now there's even more potential. There's a greater opportunity, and it's completely opened up our eyes and broadened our vision into what it is we're trying to do, which is help people do better. Wrapped with the ES community just makes that process so much easier.
Now, if you're an owner-operator or small fleet owner and you would like to learn more about how you can drive savings to the bottom line of your business, the ES Advantage program has the discounts and services that deliver the kind of unrivaled advantages that are designed to help you improve your overall operation. Get connected with the ES Advantage today.
Well, hey, everybody. Hey, Jeff. We're on the wrong
Hey,
side.
man.
Dang.
Sure. I can't tell, so.
Whatever. Oh, all right. Full disclosure, I'm going to get a migraine during this show. So when I dip out, I have to leave the screen on because our guest's going to be on the phone and I can't make my video go away. And because if I do that, then he goes away. So if I dip out, you know why. Just stare at my pretty pictures and talk to Jeff and Tony. So yeah, who was first? I can't remember now. Selena and Dip, we'll say. All right. Wimpy was second, I guess. I don't know. I don't know who's who. That's the music in my head all the time, by the way.
You're obsessed.
Lisa said, want to hear a dirty joke? A white horse fell into a mud puddle. Want to hear a clean joke? The white horse took a bath. Just saying. Ba-dum-bum. Oh, that's beautiful. Whatever. I'm just saying that's a good one, Lisa. Thank you.
That's a silly one.
Trucker Tim, other people, Dennis Lewis, James, good to see you. Yeah, I'm scrolling fast. I know Matt Nisson's in there somewhere. Some other people, whatever. Hi.
People.
Reading is not going to be my strong suit today. Yeah. Jeff, I'm going to rely on Jeff a lot today. Whew. Jeff, it's coming fast, bro. But hey,
and it's a really big show. No pressure.
It's right, exactly. I mean, it's kind of a technical show, right?
Yes.
Oh, geez.
So Wimpy said this like 10,000 times already. So let's just put it out there, Charlie. I haven't looked into it, but he says that the W9 is dead. They're not going to be making it anymore.
It's a nice truck.
It is.
If someone gave me one, I'd drive it, and if I didn't have to depend on it to make money.
Yeah.
That was my response to him earlier.
Well, Depends on the operation, though, right?
right?
If
You
you're
know,
running over-dimensional heavy haul step deck, who cares?
sure. Uh, yeah, I told him, I said, I would dig one if I wasn't paying for it and wasn't dependent on it to make money. I said, during doing reefer or van, I want an aerodynamic, fuel efficient truck with low maintenance costs. That was my response to him earlier. I thought that was a good
So
response,
Cascadia,
right? Right.
I'm just saying.
So let's dive into this thing early, Jeff, just in case
Okay.
my head goes bonkers. What we're talking about, a single accident, a cargo, for cargo damage, business interruption can cost thousands if you're not properly insured. But how do you know if you have the right coverage or if you're just throwing money away? We've got Tony on tonight, Tony Dennis from Seabright Agency. He's an insurance expert with decades of experience helping trucking businesses protect their assets and avoid costly mistakes. Doesn't that sound good and official? Man, I like that stuff. But I'm going to bring him up. He's on the phone. He's having internet problems, so we got him on the phone. I'm going to bring him up onto the show. Tony, are you there, sir?
I am.
Awesome.
Yay.
All right. So, what some of the things that we're talking about, tonight, Tony, is the most common insurance mistakes that cost truckers thousands, right? The most costly mistakes that we found, assuming that they're fully covered without reading the fine print, buying the cheapest policy without considering the coverage limits, or not having the right coverage for leased or rented equipment. And that'll take us into the key policies truckers often overlook. Business interruption, or what we call BOE, business operating expenses. Cargo insurance specific limits, exclusions, claim disputes, non-trucking liability versus bobtail. So I'm going to put a graphic up that you won't be able to see since you're on the phone, but I'm going to let you and Jeff kind of dip into this a little bit. But Tony, what's the most common mistake you're seeing truckers make with their insurance policies?
Typically, I would start with when they sign their contract, you have to be aware of what the motor carrier brings to you. So keep in mind they're the author of the contract. It's already in their favor. And so you become a participant into their lifestyle or their operating style. The biggest mistake I see most owner operators make is never understanding what occupational accident is intended to do. So some of the products out there on the street today, for example, are a secondary medical, which means that your private insurance pays first, and then the occupational accident program comes over the top and pays whatever is left over from the medical carrier.
Right.
You need
Right.
the first thing you need to do, and I see some of these, fair enough. You need to make sure that when you read your policy, you know that it's primary. And I would suggest that most of our major competition are primary, but there's a lot of that secondary market out there, and they still have a good presence, and people get caught up in it. And then they find out the coverage is really in their court on their medical, or their wife's medical, or their spouse's medical, whatever the case is. So I see that. You need to make sure when you start looking at the insurance required by the motor carrier, that your business doesn't go out of existence
Right.
just because you've terminated a contract, either through you terminating it or the owner or the motor carrier terminating your owner operator contract. And you want to make sure that it's transportable so that you can make your next business decision and still have your insurance intact.
Mhm.
The last thing that you need to do, and of course, Charlie and I have talked about this over the last couple of weeks, just on accounts that we know where a contract is terminated, and then the guys out there with no insurance can't even drive home. Or they pull you out of the truck, repossess the truck, and there you sit with, again, no way home. So those are the things that we look at. We want to make sure your business is protected. We want to make sure that your business is acknowledged other than just the name of the driver.
Right.
Mhm.
And as we go through these coverages, we'll start with whatever you guys want to talk about first, but we want to make sure that you understand that when the insurance is issued to the motor carrier, your termination by either party, your insurance goes away. And in some cases, it goes away because your lease has been terminated. So we want to talk about things that you can do if that happens to get around so that you can move your truck and get home.
Right, and that's what I wanted to touch on, Tony, because you and I had a discussion about this today.
Yes.
Let's say that you're at Swift, Schneider, JB Hunt, whatever. You decide, because you have a plan, you have a business plan that says it's time for me to go to Landstar. And let's just take the Swift lease as the example, since that's most of our audience here. Let's just pretend, folks, you have the money to port your lease out, which means you're putting a sizable amount of money down so that you can take that truck to another carrier. But what happens, Tony, and correct me if I'm wrong, because you know I'm still fuzzy on a lot of this, I terminate my contract at Swift. I have arranged to pay the truck off however I do that so that I can take it to Landstar. But as soon as I terminate that contract at Swift, if I have Swift insurance, my insurance is gone. So how do I move the truck? Right?
Well, yeah. So that's exactly what would happen. Swift would tell you that your insurance is null and void, so you have no auto liability, which means you can't drive across the street. You have no coverage for your physical damage. You have no coverage for your non-trucking because that's tied to the lease. When the lease is terminated by either party, that coverage vanishes just by design.
Mm-hmm.
And your occupational accident, because it's issued to Swift, if you're on their corporate plan, that also vanishes and you're no longer in the trucking business. So you can't move your truck. And it's a huge problem because turnover, I mean, if turnover is anywhere close to what you read at 50%, 60%, 40%, it's still a large number of trucks every day that contracts come and go. And you need to be able to move that truck. You can't get caught. You can't show them your old ID, because if you get in a claim, you will have known that you have no coverage. Swift will make you very aware of it, and they should. So what you're looking for then is to protect your business. So that corporate model only really is designed to take care of it while you're in agreement. It's when you're in a disagreement and terminated, you're on your own, and now your entire business model is put on hold because you have no insurance to operate.
Right.
So two things could happen. You start with a truck. Your truck could be repossessed because part of the agreement is you keep insurance on it, right?
Right.
So you need to keep the physical damage. You need to go to the marketplace and get physical damage on a typical lease. You also will have to go buy an auto liability policy because your non-trucking, which allows you to move through non-trucking arrangements, would be gone because the lease is broken. And auto liability becomes very, very expensive. You can go out, I mean, that's a whole show on its own, going out on your own and buying your own auto liability. So what you can do when you go to the private sector where you bring your insurance to them, first of all, the insurance doesn't terminate. Your OCAC stays intact. Your non-trucking goes away just like anybody else because you don't have a lease agreement, except we can give you an unladen liability, and it's a temporary move policy that you would pay for to move your truck. Can't haul freight with it, but it will allow you to get home, right? So if the motor carrier can test, some motor carriers will let you get home. I mean, that's a great move if they do that. I think they should, but there will be those instances where that's not true. However, so you can buy an unladen. You can buy a 3-day policy to get you home, a 5-day policy, a 7-day policy to get you home. Once you get home, get your bearings straight, start making arrangements, find a motor carrier you want to move to, call us back up, activate that policy, and get you down to the motor carrier for your inspection, your interview, to go through your background, and get you leased onto a new motor carrier. at which time they will offer you a corporate insurance program. You should compare the two to the private that you hold, and you take the better coverages. And the bigger you are, most of the time, the lower the rate. It's the law of large numbers. Right? But when you go that corporate route, your insurance, if something goes awry, you're back to finding no insurance again, and you're out looking for it. So if you control it at all times, then you get to control your decisions like a business.
Right. It really is the
goal.
It really is the difference between actually being in business and just kind of dipping your toe in and playing business guy, right?
Correct.
Because with your plan, Tony, what you came up and what you're explaining to us right now is actually taking care of your business. 100%, it's on you. Doesn't matter if you lose your contract or not at that point. You're still in business.
You are still in business,
and that's key. You know, we talk to people all the time that are not doing so great. And the question is, do you want to stay in business? Are you even in business? Right? Because a lot of people, unfortunately, they really are. We have a phrase in the industry, and it's not just our industry. People really do just pay for jobs. They're paying for a job. They're not really. They don't have that mindset that you're talking about. Trying to stay in business and create this insulation between you and the carrier, so that if things go awry, you're still in business. That's what we're talking about.
Absolutely.
Army Kane here.
When you're in business,
I have a pretty good question. I do have a good question here, Charlie.
Okay.
Why wouldn't you just get on with Landstar before you terminate your lease with Swift? This allows the two insurance overlap and you'll be covered. Is that true, Tony? Or no? So if I sign a contract with Landstar before I terminate my contract with Swift. Now, keep in mind, you have to go through their orientation first. So you're going to have to have your truck inspected first before they'll let you sign a contract. So you have to transport that truck to their facility to get that done.
Correct. So if there's no accident, there's probably no foul. So let's just assume that guy's mentality is, look, I'm going to terminate my contract with company A and I'm going to move it to company B, and I'm not going to take a load, but I haven't terminated my contract. I'm going to drive my truck to company B, get it inspected, do all their background, and when I'm ready to sign the contract with company B, I'll terminate company A once B's is in place.
Mm-hmm.
That is a very traditional behavior for drivers, right?
I hear a butt coming.
99.9%. Yeah, 99.9% of the time, I would guess that nothing goes awry. It's when it goes awry, and all of a sudden, it didn't hit properly, and you got two insurance contracts in play.
Right.
It's the worst claim I've ever been involved in. He put the second contract in place, and the primary contract was still intact, and an accident occurred, and he'd yet to haul a load. Who's responsible?
That sounds like a mess to me.
It was a mess. And what ended up happening was they kept both policies intact and allowed them to stack. And so instead of having $1 million auto, the guy had $2 million, and both carriers got dragged into the mud, and both carriers paid. So it didn't win out for the carrier A or B, and the driver now has an incident on both A and B at the same time.
That's not good.
No, and which forced him to go to another carrier. But he was unable to move until he resolved that case. Nobody would hire him. So he ended up going out of the business until it was resolved, to which when he came back, he didn't last very long at the next job either.
Go
So
figure.
you can do it. You got to make sure that you do it right. And I'm not a proponent of that. I think if you are terminating, man up and terminate your contract, put the proper insurances in place. You are in business. Go do your interview, move your truck. And if you sign an agreement, replace it accordingly. And if you don't, put the insurance back on, take it home, and find a better suited company.
Right. So the other thing I'll say, Army
Right,
Kane,
so-
is this in the case of like a Swift, where you're leasing the truck from the company that you're leased to, which I know they have it separated legally, but you're leasing a truck from Swift. You had to have called them and had that truck released from IEL, from Swift, on the IEL side before you could even go apply at Landstar. Because you're gonna tell them, yes, I have a truck. Well, show us that you have a truck. They're gonna want to see insurance on it. They're gonna want to see paperwork saying that you're not leased on to Swift when they do that. Because the thing with Landstar, and I don't know if you knew this, but they don't lease trucks at Landstar. You have to get your truck outside of the company at that particular motor carrier. So it's not like you can just say, hey, I'm going to go to the carrier B and lease a truck from them up your Swift. You can't do that in this scenario. You have to have a truck when you go over there. And if it's an IEL truck, you have to put that big down payment down. You have to arrange to port the lease out ahead of time, so they know you're leaving. Why in the world would they keep your contract in place when you've already applied to have your lease ported out? So that, Charlie, you agree with me on that?
Yes.
Excellent. We have another
shot.
Curiously important question from a curiously important man, Wimpy McPote, with a man with a million excuses.
Yes.
He's asking, how does a fatality affect your insurance rates? This is something, Tony, that we, yeah, a lot of people wonder stuff like this, Tony. You have a fatality, what's going to happen to your business, even if it's not your fault? Because what's going to happen, whether it's your fault or not, you're getting sued. Right? That's just the way things are.
So the fatality in of itself is just a type of claim. So it's your experience. So it's the amount of the cost of the claim, whether it's paid out, legal defense. So you can win a lawsuit. It's still part of the expense factor and will show up on your loss run. So losses, when you're an owner operator, a small motor carrier of one. And so let's make sure we understand terminology. An owner operator is somebody who leases on to a motor carrier. An owner operator who gets his own authority instantly becomes a motor carrier because he has his own authority.
Right.
So an owner operator leased onto a motor carrier, right or wrong, the loss goes to the motor carrier. It's one of the things that are wrong in our industry. So let's say that guy asked a great question. I go to work for Swift and I cause Swift a $500,000 loss. Okay? The only thing that will show in my MVR is an accident. It doesn't show finality. It doesn't show liability. It doesn't show claim amount. So I can go lease onto another motor carrier who will accept a single accident. The footprint that driver caused stays with the motor carrier, and it stays with the motor carrier for 3 years.
Wow.
Okay. And now, because losses are they're trying to hone in as an industry, some carriers go back 5 years. Now, the older it gets, the less value the claim has, but it still shows, and they have to look at those claim totals, even though the driver's gone. So you would think, because let's say you're the driver and you got in the accident, they would terminate you almost immediately, I would think. Right? So the impact of that accident will stay with the motor carrier, and the reason it stays is it's more of a hiring practice than it is a driver.
Okay.
Right? It's the decision to allow you to contract with them that became the issue, right or wrong. And so that's how we look at it. You could try to explain it away. Dash cams are a great tool to make your case when you are not at fault. It's a huge, huge asset. As an owner-operator, when you're leased onto a motor carrier, I understand nobody wants a rear-facing camera. There's a reason for them. If you're dozing off, you're falling asleep, they can notify you. I get all that, and it does have value.
Right.
But the forward-facing and the side and the rear cameras can absolve you when you are not at fault, and it's uncontestable.
Right.
A picture is worth 1,000 words, right?
Right.
And everybody can see the behavior. And so, when these clowns pull out, slam on their brakes, and you hit them in the rear, that, because you're in the rear, you're always at fault. But it's malicious intent on the front end of it. And you can show that, especially when they do it twice because it didn't succeed the first time. Right? Or when they merge from your blind side on the right, hit you and claim you cut them off and ran over them.
Well, I don't know if you saw this one, Tony, but there was some dash cam footage that I saw a while back where truck was merging onto the freeway, stopped traffic ahead, so he stopped, and the car in front of him literally threw it in reverse, backed into his truck. And then all four people in the car got out holding their necks until he pointed to his dash cam, showing he had it all on film.
Right.
And then they frickin' just deed him out. They were out.
They're like, bye.
Now you're going to be the guy that says all you have to do is buy a dash cam and mount it up so it's big and they can see it.
Right.
Well, it's like all the people with the home alarm signs in their front yard that don't have alarms.
Right.
Yeah.
Where we
Yeah,
at
Wimpy, you're absolutely right. A camera can also show that you're at fault. You are correct.
That is true.
So, I'm 20 years and I've had one accident, Tony. And there was no other vehicles involved. It was a sliding on the ice type of thing. And I know you keep telling me that my number's coming, but I'm a pretty safe driver, chances are, and I have real wood in my Western Star, Charlie, so
whatever.
Real wood in my Western Star. Hey, I got it in there. Chances are I'm not at fault in an accident. So a camera for me is a must have.
Right.
There's some shady guys out there though, that maybe they don't want a camera and maybe there's a reason for that. I'm just saying.
I know a few, not gonna lie.
Yeah. So where we are in the flow, as we like to call it, Charlie, is segment 2.
Okay. You want me to put that graphic up?
Sure. Let's put the graphic up. Not that I can see it.
But I would tell the guy that says, I would tell the gentleman that says that having the camera can prove that he's at fault.
Mm-hmm.
If you don't have the camera, you're still going to be at fault.
Absolutely.
That's right.
And so they're going to nail you to the wall. The question is, can you get through that claim for the least amount of money?
Right.
Right. And that becomes everybody's goal. I mean, I give you an example. I don't think, and I know I get smacked around when I say this, but I think when people go around with these $10,000 mini mo policies on their cars,
Right.
and they get involved in an accident with another car and the damage is 30 grand, guess what? Even though you're not at fault, let's assume the other guy's at fault, your policy is going to have to pay.
Right.
Mm-hmm.
Now he gets involved with you in an accident, claims you're at fault, and he sues you for $1 million. It's because that's your policy limit.
Mm-hmm.
Right. Yeah.
He shouldn't be able to collect any more than he's willing to protect other people from him.
I agree. I like that thought.
I like that thought.
thing.
Yeah.
I disagree. And so if you're an average homeowner out there and you got 100, 300 and you total out a semi, I think there's a reason to accept that as a reasonable amount of limit. And I'm not saying it has to be 100, 300, but there has to be an amount that everybody carries to cover the other person. And if you're not willing to cover that, you should only be able to collect your policy limit off the other guy.
Right.
Right.
Right? You know,
So let's talk about the different policies for a second.
Okay.
And we've
You
got
want
a
me to
graphic
give
up
me a
right now. What every trucking business insurance policies should include. And Charlie, go, because I can't read it.
So yeah. So general liability coverage is bodily injury and property damage. Primary auto liability that meets FMCSA requirements. Cargo insurance covers the freight damage and loss. Business interruption insurance protects lost revenue. Non-trucking liability or bobtail insurance. Physical damage coverage covers repairs and replacement of your truck. Workers' compensation or occupational accident insurance. Rental and lease equipment coverage, covering those ones that you have to rent in the event of, is important. Uninsured or underinsured motorist protection. And I could actually see this pertaining to pretty much everybody in a way. The environmental and hazmat liability, if applicable, it says. But I mean, if you rip open a diesel tank, you're now on the hook for hazmat crap.
Yes.
Blow a radiator and it's leaking down the highway. There's more hazmat, right? I mean,
Or have a tow truck punch a hole in your
yeah,
oil pan.
that's
just saying.
great. But Tony, go ahead, Jeff.
Yeah, so Tony, some of these things are gonna, if you're an owner operator versus a carrier, the carrier's gonna carry some of this load for you. That's one of the advantages of being a contractor versus going out and getting your own numbers. So can you tell us from an owner operator perspective, which ones do we need to have to protect ourselves, and which ones are going to be carried by the carrier? Because one of the things we talk to people about, they want to go out and get their own numbers. Well, now they got to have cargo insurance. Now they've got to have general liability. They got to have this. They got to have that. And it totally, by the time you add all that up, Charlie and I do it all the time with guys. All of a sudden, your $2.50 a mile loads, they're making what we make anyway because of all the insurance they've got to carry.
Correct.
So what is it that we have to have on our end?
Let's identify the motor carrier and exclude what they bring to the table, because it shortens the conversation. So when you lease onto a motor carrier, because they have their DOT-NC number, they're going to the market and they're going to purchase their own auto liability that will extend coverage to every owner operator who's under a lease. The auto liability protects the general public from your behavior. You get in an accident with them, the auto liability will protect both the motor carrier and the driver. Because the bill of lading comes under the motor carrier, the motor truck cargo is provided by the motor carrier. That coverage extends again to the owner operator. Right? So, and I can't think of anybody's lease that I've seen that excludes motor truck cargo. I've seen deductibles where they want you to pay the deductible, which is a fair trade, right?
Which, by the way,
And
if
your
you guys read
custody and
your,
control.
if you Swift guys read your ICOA, there is a deductible for that.
Yep.
Yeah, and so it's a way for them to recoup their expense based on your driving, right? So it's your actions caused the issue, heartbreaking, whatever it is, whatever you tip a load over, they'll impose that. That's traditional. I don't care either way. I give the motor carrier credit if they eat it all, but I think that's far and few between. Mm-hmm. So once you get past that, the rest of the coverage that you're looking at, if you go look at a Swift program or anybody else that didn't use Swift, but if you look at an outside motor carrier that you're leasing onto, they will go out to the marketplace and get to a physical damage policy. That policy is issued. And again, what that tells you is if you terminate your coverage, if you terminate your lease, that policy will go away.
Right.
Mm-hmm. That is an industry practice. Physical damage is a coverage that you buy to protect your truck from damages caused by you or others. And one of the things that you need to make sure of is that you have uninsured, underinsured, so that there's no gap in your policy. So you need to make sure that whether you're at fault or they're at fault, that policy will protect you. So some of the cheaper Lloyd's products may or may not cover that, and that exposure falls back against the owner of the policy. Okay. I would guess in most cases, you have to assume that the motor carriers are diligent enough to make sure that that exposure is eliminated before they give you the coverage. On smaller motor carriers, 2 and 3, 4, 5, and 10, I'm not sure that's always the case. So you should look. So the agreement for that coverage goes like this. You pay them a premium, and that premium can go up or down by how much risk you want to take. So if you want $1,000, a very low risk, your premium will be higher than if you go to a $2,500, a $5,000, or a $10,000. But if you choose any of those numbers from 1 to whatever, just be prepared. If you had 2 in a month, you probably just ate those limits in today's arena, right?
Right.
So you need to be prepared to have to cough up whatever it is you have, whether it's your fault or not. So when you have that physical damage, and then you need to think about it in a different term. So physical damage covers your truck, and it may cover the trailer. So you may be responsible for trailer interchange, and you have to provide them coverage for using their trailer. And they will tell you in your lease agreement if you have that for both the truck and the trailer.
Right.
And most of the times, you're responsible for the deductible, right? Or you can have what's called an incident deductible. An incident too small to be paid for by an insurance claim, therefore you owe it.
Right.
Right? And that's usually spelled out. I don't think people try to hide that. But you need to be aware that that exposure can occur, right? When you leave, that policy will terminate because it's issued to the motor carrier.
Right.
Okay, so you terminate it. You're under an ICOA with Swift. you need to make sure you have your insurance in place. Okay? So physical damage then sets aside, it covers your vehicle, it can cover the trailer. It's in place because it's issued to the motor carrier for as long as you're under contract.
Excellent.
The
So
next thing they're going to make you have. Go ahead.
No, go ahead.
So the next line of coverage that they're going to make sure that you have is called non-trucking. In some cases, flying a bobtail or unladen. So in a typical lease, non-trucking is designed to cover the non-trucking business-related parts of the industry. Most states have decided that almost everything that you do falls on the auto as opposed to the non-truck. You go to get your truck moved on Saturday and you want to go put tires on it. Well, tires are an essential part of trucking. Therefore, if you got in an accident, hurt somebody or damage somebody's vehicle, chances are the non-trucking will reject it and the auto liability will be responsible.
So when we were discussing this earlier, Tony, you brought up something that I thought was a good thing for people to hear. And that is, if you think that your non-trucking is going to cover it, but your logbook disagrees with you,
Right.
your logbook is probably correct.
Yeah, that was my personal experience where I got up and moved I live on a farm, so my truck was at home and I actually moved it and it reset my logbook. And I was in violation.
Mm-hmm.
Right? So you have to call in and tell them you're moving that truck. Well, all I wanted to do was put fuel in it. So I started up, moved it over the fuel barrel and let it run to warm up and it reset the log.
Yep.
So now I'm in violation. I have a logbook violation.
Right.
Shame on you.
Right. So the motor carrier. Yeah, I know, right? And we had a hard time. So we had a hard time explaining it because I own the dumb thing. You know, I was a partner in the thing. So what really happened is I had to spend an hour Monday morning trying to get the start labeled as a start and not trucking. Because theoretically, what they told me was, look, if you're doing maintenance on it, it's the same thing to us as driving.
Mm-hmm.
Right?
And legally, that's true. That is what the regulation states.
Yeah, so if you do your own maintenance, all you're doing is taking away earning time. So,
mm-hmm.
and so what we now have is we have the ability, if it's maintenance, so I would make sure that your camera and your log have the ability to turn it off while it's in for maintenance, right? If I drive it somewhere and have it fixed or repaired or serviced, I don't want that time counting against my book.
Right.
So we now have a deal with the shop. We drop the truck off at the shop, take the guy home, and you know, it's a local thing within 4 miles of the shop. But anyway, the physical damage, then make sure it's the non-trucking covering you for that incident. It's also used to get your license plate. So when you have to show that you have your own insurance to protect the general public, you can produce the non-trucking and they'll accept that to get your license plate. The issue with that, just like the physical damage, when you terminate the lease, because that's how non-trucking is associated, or that's how it works, that non-trucking automatically disappears. It's terminated with the physical damage. Even if you went to the private sector, bought all your own insurance, that policy would terminate because there's no lease to attach it to. So now you have to use what's called an unladen liability. It's a temporary policy that allows you to move that truck to and from based on a 3, 5, or 7 day policy. So you can buy it any one of those terms or anything in a 24-hour increment you could buy it for. And it allows you to move it. So you, as you said, you were a Swift and you moved to Landstar, you would simply purchase that policy. You have an ID card. It allows you to get there and you sign on. Great. You take their insurance, or you don't sign on. You can now get home and start the process over again. Right. But these are business decisions that owner operators need to make. And when you buy the corporate, they've taken that decision away from you. It's a one-sided decision, right?
Right.
And so my argument to motor carriers who may or may not listen to it, these contracts that they write, think about it. They went out and started a business. They went out and got their own auto liability. They went out and negotiated the motor truck cargo. They went out and negotiated the physical damage. They went out and negotiated the non-trucking. They go out and negotiate the workers' comp. They go out and negotiate the occupational accident benefits. You have no say when you take their plan. The only decision you're making is, if I don't take it, I can't pull. And if I do take it, I have to pay the premium.
Right.
You have no decision in that business model. There's no other business that allows you to not have any decision and call yourself self-employed.
Right. And so, everything we're talking about here is, we talk a lot about the separation between carrier and contractor. And I'm going to say the dirty word, Charlie. Are you ready?
Do it.
This is an AB5 thing.
Right.
Yeah.
Right. Now, those of you that were at Swift when the big lawsuit hit, Charlie and I were talking about it at the time. We had stopped hating each other by then and started liking each other. So we were talking about it. And we were really worried, Tony, that lawsuit was going to kill our businesses. We weren't worried about the money that Getman was dangling in front of our noses. We were worried about losing our businesses, because if it cost Swift too much money, they would just end the program. And then what are we going to do?
Right.
My business at the time was based on mentoring new drivers. That's what I did. I'm one of those silly people. I probably still have it in my driver's file back home. My old business plan.
Right.
Because you remember, I actually showed that to you at one point, or at least discussed it with you. Especially when I was making the transition from mentoring to not mentoring.
Right.
I had to write a new business plan. Very imperative, folks. Have a business plan, because that's part of the components that we're talking about here. We're not just talking about insurance. We're talking about staying in business and being actual business owners here and being responsible for our own futures. So that'll bring me right into a good segue: business operating expenses. When you have an accident and you're injured, right? And since we have the expert on, Tony, OCAC is going to pay my medical. They don't give two poops about my business, though. I'm still going to have lease payments. I'm still going to have to pay Seabright the money for the insurance. I still have this. I still have that. An injury could put you out of business if you don't have this coverage. So what does that coverage do?
So let's talk what it's attached to, because that's the way to look at it, right? So if you get injured in an accident, we've already covered the auto. You're going to cover the other person. And if you damage the cargo, that'll be covered. The physical damage will pay for your truck and then the trailer if it's insured. Now it's the driver. The driver now, he's made that decision to lease onto the motor carrier. The motor carrier negotiated occupational accident. So they can cover them by workers' comp. You would have to pay for it, I'm sure, but you could be covered by workers' comp if you ask. Or you can choose a program called occupational accident. Both policies primarily have three things. One key component difference I'll explain at the end. But under the occupational accident, it has life insurance for accidental death and dismemberment, so that in the event that you pass away as a result of the injuries, your family could receive up to $250,000, and that amount could vary from carrier to carrier, but a typical amount is $250,000. You can leave that to a dependent spouse, $2,000 a month for 100 months. You could do lump sum. Most guys, the way I think it's set up, most guys get a $50,000 lump and then $2,000 a month for 100 months, right? It just helps preserve the entity or the family. The next thing is most all of them will have a medical division, and it will pay 100% up to a cap of an aggregate of $2 million or $1 million. You have to read. But most of them will cover it. Some of them will be secondary. Most of the products on the market, I think, are still primary. But that means your medical bills will be paid at 100% zero deductible. Very important. It's a zero deductible. There's no network. You get injured, the bill is paid. Okay? Mm-hmm. And the third thing that it comes with on both policies would be disability income. Both of them are based on 66 2/3% of earnings up to a cap of X, whatever X is by your contract, whether it's $750 a week, $500 a week, $1,000 a week. If you buy it from the carrier will have negotiated that limit, not you, and you agree to accept that as a form of coverage. Okay? If you purchase your own outside, you can negotiate with the carrier the limit of coverage you're looking for. But if you stop now, let's just recap what the motor carrier's done. The motor carrier has dictated and negotiated the auto liability, the motor truck cargo, the physical damage, the non-trucking, the occupational accident, and or the workers' comp. They've also written the lease that you agree to. Mm-hmm. What's your contribution to this entire equation?
A signature.
Only your signature to agree to do it, right? Then they put you in a truck with a zero down. You have no skin in the game.
Right.
What's the only thing they didn't cover in their wisdom and thinking? Your business.
Right.
They didn't think of that. They covered the household duties just like what workers' comp covers. Workers' comp doesn't care about your business expense. It doesn't cover it.
Right.
Right.
Right? So even workers' comp for those people, that's left out. They don't care about your business overhead. They don't care about your expenses.
Right.
And your expenses, because you are a owner operator, your expenses will continue. So we developed several years ago a business overhead expense policy to cover your business's expenses. Now, you can buy that policy for a 30-day window. You could buy it for 60 days. You could buy it for 90 days.
Right.
Or you could buy it for a year. The difference in cost is virtually nothing, less than $5 to go from 30 days to a year. People will come to me and say, well, the average disability only lasts 90 days. That's great. If you're that one and whatever the number is, and it goes on, that year gives you a chance to sell your truck, to get rid of the exposure and liability.
Right.
And you need that decision. You need to be able to protect that expenses. You may have filled your truck today up on credit. You're going to have to pay that in 30 days or 60 days. And you have no earnings. You have a truck payment to pay while it's being repaired. And you can't work.
Yep.
You need that income. You could be a guy that has no truck payment, all of his bills are paid, and he prepaid for the fuel in his tank. His business will continue, and he can take that money. There's nothing, once that money's paid, there's nothing to prevent you to take your kids to Disney World. That isn't the point. You run your business.
Right.
And if you want to allocate that money for a vacation, I can't stop you. I don't want to stop you. I want to protect the integrity of your business. And that's what that policy does.
Right.
So that when you become injured and you can only make your house payment or your truck payment,
Right.
I guarantee you, you will make your house payment and you will let your business go under.
Right.
Your wife, if you're married, is not going to let you keep that truck.
Yeah, I'm pretty sure her and the 7 kids aren't moving into the truck.
Right. So so here's what the motor carriers do wrong. That drives me insane. They negotiate every aspect of that contract because they're the author of the contract. And they don't cover you. They don't even give you the exposure to cover it. They don't give you the ability. They don't make you aware that that's an option.
Right.
We do. We protect that business. And we want you to know as an owner operator, we are after the complete concealment of your business to make sure that you can get through trying times when you're injured. Now, I can't protect you from dumb decisions that cause you to go bankrupt for other reasons.
Right.
But we can from this standpoint. And that's the value of having your insurance on the outside as opposed to the inside. Each of these drivers that we have through the SWIFT program, and I'm not going to hide it, I know that when they get injured, and it has happened, you should get those guys on. All of a sudden, they got money for truck payments.
Right.
They got money to cover that primary lease payment, and they still have the funds to lease the truck to continue to make money. Because the repairs outlasted the injury, meaning they got better before the truck got fixed.
Right.
And this policy will pay.
Right.
So the other thing that you need to know on the physical damage, if you have a truck that has been injured and has to be repaired, under the private policy, you just swap right over, and as long as you notify us that you're going to be driving another truck, the office has to be notified. I just say that. And then we extend the coverage because the truck now is in the shop, and any damages other than an act of God, right, or somebody running into it, but typically it's somebody on the lot, coverage is at both places. We're covering the new truck, no charge. We're covering the old truck, it's part of the condition.
Right.
Right? So you want to make sure that the premium is only one. Now, if you are driving an $80,000 truck and you lease a $200,000 truck,
Yeah.
your premium will go up because that 140 or 120,000 is uncovered.
Right.
But
Right.
that's a business decision. Okay.
Yep.
So now we got the OCAC. It covered the business, the injuries, the disabilities. It covered the medical. The only thing that's missing, one of the key differences is employer's liability. That's so if somebody sues you because they were working for you, that's a different issue. Right. 85 says as an owner operator, you decided that you are really an employee and you want to be covered under workers' comp.
Right.
Mm-hmm.
Our drivers don't have to make that decision because what's gonna drive that to be in a decision to be made when you can't cover both your business and
Yep.
your household. I've eliminated that exposure. That's what that policy does. So the motor carrier doesn't have to fear everything else under the sun from that driver. So when he's sitting there injured and he's watching television and says, "Have you been injured?
Yeah.
Call me." "Oh, you're an owner operator. You're really an employee."
Yep.
and the shit show begins, right?
Exactly.
Yep.
Okay.
Or
So
dare we say it,
we
Charlie?
take away, if you look at,
A contract employee.
Right.
We
Those
heard that
magic
one
words.
recently. That makes no sense to us at all. But it is something we heard recently.
well, it was misused because a contract employee is like a general contractor building a house, but the guy who comes in and frames the house either provides you with a certificate of workers' comp or it's added to the general contractor.
Right.
And that's what the motor carriers face. So when they allow the occupational accident to replace it, that's a formidable coverage. It should protect it. But what they forgot about in all these incidents is they didn't protect the one thing they needed to protect, which was the business.
Mm-hmm.
And so the lawsuits still begin, and they still happen.
So Tony, what should trucking business owners be asking their insurance agent to ensure that they have the right coverages?
First, when you get the contract, and I'm sure everybody will give you a copy of all the insurance policies, right?
Mm-hmm.
You either have an insurance agency that you trust, you have one that you can seek advice, you send it to somebody to read it to make sure that they can explain it to you in layman terms so that you know what's covered and what's not covered. I don't think most people pop a beer and sit around and read their insurance policies at home with their buddies.
No.
Right? And yet I have people every day call in and tell me how much they know.
Yeah.
So there's nothing I can tell them. You can't tell them they're wrong on anything because they'll argue the point.
Right.
So have somebody can read it, send you their opinion of what it is. A good licensed agent will do that for you. And then make your decision. But if you don't see that external policy, business overhead expense, business interruption, there's a gap.
Right.
That policy, by the way, is issued to you as the driver.
Right.
When it's issued to the motor carrier, who's the insured?
Motor carriers.
The motor carrier. Yeah, they just afforded you coverage. Why would you let anybody else own the policy that covers your business?
Right. Yeah, it's
Yeah,
crazy.
that's one of the things too, Tony, is that a lot of people at these mega carriers, they go into it and they assume, well, they must know what they're doing with insurance, so they must have the best deal. So why would I go out there and shop for different policies on my own? Why would I do that? The motor carrier's got my back. All of that,
Right.
kumbaya stuff. Which when we met you,
I
Tony,
agree.
we learned how much more risk we were carrying because we did not do that.
Right.
Yes.
Basically
So
driving around there
you
naked.
go to them and yes, you go to them because they're bigger, they have money, they have attorneys, they do all the right things, they draft your contract, they protected you until shit hits the fan, and then they say, oops,
Right.
well, you read the lease.
Right.
And they're responsible. And so you look at them, and that's why they sue. And by allowing you to go outside, Swift, I got to commend Swift. They do a lot of things right. I'm going to say that. By allowing you guys to go out and secure your own coverage. Right? We've had our fair share of incidents. There's no question.
Mm-hmm.
Right? We've had drivers get their terminated because of their lease agreement and left stranded. We've secured that even, right? So if you're involved in an accident, we haven't got that far yet, but we actually pick up the expense to get you home.
Right.
Yep.
They didn't do it because that makes you an employee.
Right.
They're hard-lined about that, right?
Absolutely.
Yeah, and so it's hard line. So we've even covered that part for the break in the contract to get these guys home.
Right.
And so any motor carrier who does that, most of them will, they don't want to pay that expense to get you home because that makes you an employee.
Right.
Right? Subway isn't going to pay for somebody else supplying them bread in
Right.
case they get in an accident. We're not going to afford them coverage. So this little thing that Swift done is they've negotiated all the insurance coverages, the premiums, the policies are issued to them, but extend coverage to the driver. In our Swift program, they've done it up until the point of auto liability, motor truck cargo. After that, the driver has went out and successfully negotiated all the coverages.
Right.
Has to meet guidelines set by Swift. So it has to be a minimum of that or stronger. And so our coverages are much broader on the outside than they are on the inside. They meet all the line of coverages that Swift has set in this case. And over here, every incident you can lay upon us, we can fix from the driver's standpoint. And it's going to be very hard for that driver to make an AB5 claim.
Right.
There's
again protects the
5 times
carrier.
more insurance put into that driver's name than the motor carrier. And the motor carrier, and Swift doesn't even know. They don't even care. Charlie, when we were in Arizona, they didn't care.
Right.
We tried explaining to them that you are an additional named insured on our policy, not the other way around.
Right.
Today, Charlie is the driver of Swift. He's an additional name, an additional insured on all their policies, except for the policy he gets outside. All of a sudden, Swift becomes an additional name.
Right.
And they are protected by these policies.
Right. It just flips the script a
Wonderful.
little bit, and it protects everybody,
Yeah, it does.
so that
It
we can
protects the
continue on
driver,
our
it
merry
protects
way.
the motor carrier. Yeah. And all the bright insurance people selling 13E shoes out there
Right.
didn't fix any of that. I'm a product salesman. You need this product, I'll give you a rate.
Yep.
So what they'll do is, the carrier says, you save me a penny, I'll leave. There's no continuity to it. You come to us, that contract is to you guys. Your rates are based upon your ability. And for 3 years, you haven't seen an adjustment.
That's
We
right.
stood behind you when it was a bad year, and we didn't raise the rates. We've been able to stay with you. And inflation is going up, premiums are going up, ours stayed the same.
Right.
Right.
It didn't go down. I mean, that would be the ultimate thing. And so, my job is building product. My job is not to sell things, not to explain things. I simply negotiate what I see as flaws in this business. And I'm passionate about this,
Right.
right? I want owner-operators to succeed. Because eventually a good owner-operator will become a motor carrier.
Right.
So with that being said, Tony, let's move into how to get the best rates on your insurance. Shopping for policies versus staying with one provider. How deductibles impact premium costs. The role of safety programs in lowering insurance costs. Because like you said, a lot of our guys eventually are going to be moving into that carrier role. Avoiding rate hikes and claim denials. Reducing the risk factors that drive up premiums. Documenting everything to protect yourself in case of a dispute, right?
Correct. So the smartest thing a guy can do today, let's take Jeff. Jeff left, right? Jeff could have went out and got his own MC and DOT number and started his own. How long you been driving, Jeff?
Coming on 20 years now.
20 years. Can you show me a year where you were in business as a self-employed person and you've been recognized by any insurance company and have a history?
I feel like that's a trick
No,
question.
because it doesn't exist. It doesn't exist the current way you do business,
Right.
right? So what happens? Now you're a new entity and your insurance rates will come off ridiculous,
Exactly. Super high.
super high. I mean, I see numbers every day. People run them in. This guy's got to pay $35,000 a year
Right.
for his auto liability alone.
Yep.
And
Yep,
your
it
carrier's
is.
probably paying 8 to 10.
Right.
So to go out on your own, you just on one line of coverage, you're talking about $2,000 a month.
Right.
Yeah,
So-
pre-COVID,
By building a business.
pre-COVID, I was looking at doing just that. And what was it, Charlie? Auto liability, the first year was going to be something like 14 grand.
Yeah, I want to say it was 17, but yeah.
Yeah. And I thought that was high, and things have just gone up since then.
Right. So on
Yeah,
the screen,
so-
Tony,
so-
what I have up on our screen
Huh?
right now is ways to save on trucking insurance without cutting coverage. My little checklist here is, shop around and compare multiple policies, increase your deductible to lower premiums, maintain a clean safety record to reduce costs, bundle policies, liability, cargo, physical damage, use dash cams and telematics for risk-based discounts, right?
Yeah.
Choose a higher rated insurance carriers for reliability. I mean, we've seen some really bad policies out there that, I'm great. And then you get a claim and they don't pay nothing. Review your policy annually and adjust coverages as needed. Join a group or association for discounted rates. Negotiate premiums with your insurance provider. Work with an insurance agent who specializes in trucking. Like, these are all, I think these are all key things. And please correct me if I'm wrong on any of that.
Yes, but they're all right. A guy who goes out and rides homeowners on one day and trucking on the next probably isn't a truck specialist,
Right.
Right.
right? I would know nothing about a homeowner's policy. That's not my thing.
So
All we do at this agency is trucking, right? Or program.
What are the biggest
So,
ways truckers
what
can
you
save
need to
money
do-
on their policies without sacrificing protection?
So the first thing you want to do is to establish, here's what's going to happen. Let's take Jeff for an example. He'd be a prime example. Jeff calls me up and says, hey, I want to go in business. Okay, how long you been in business? And then he can say, 20 years. Oh, great. So you got experience? No.
Right.
Next thing I'll ask him, do you have a business plan? No. So you're a new entity, but you got 30 years experience. That's good. It'll help you save on your rate. When these truck drivers go out and become an owner or operator, they should have a business plan. Motor carriers should ask to see that business plan. When they finance your truck, they should ask you, what is your business plan? It should be on file.
Right.
Mm-hmm.
Right? When you go in and sign on with a motor carrier, do they ever ask you for a business plan?
Nope.
No.
None that I've seen.
Why? Because they're making your business plan.
Right.
When they make your business plan, who's in control?
They are.
The motor carrier.
Yeah.
You are just a participant. You go in, it's a $0 down. You have no invested interest in it. If you go to the bank and take that same attitude, what are they going to do to you?
Right.
They're not going to loan you money. You have to have a business plan.
They might actually snicker at you.
Right.
Well, hopefully not, right? But they might. So we want to get a business plan put together. So when you sit down, you say, I've been an owner operator. I've been responsible for everything. And somebody could ask you, pretty typically, they would say, well, do you book your own freight? No, I've made a business decision that the cost of that transaction can be provided to me by the motor carrier for less than I can do it. Therefore, I've laid that risk off. That's a much different statement than the motor carrier saying, I'll take care of all that for you.
Right. It's
That
the
approach-
it's the concept of consciously making the decision for your business versus being told how you're going to run your business.
Yes. And so when it comes to AB5, if you have a business plan that says, I've laid off the chasing of freight because it costs less, I can make more money when I don't have to perform those services. I've willingly laid that risk off. It takes away the argument that the motor carrier did everything.
Right.
Right.
Right? So in your business plan, you should have one. And you should sit down and it should say, look, my goal as a business is to sell 1,000 hamburgers a week. As a truck driver, it's to drive 3,000 miles a week based on this average rate of pay will produce this amount of rent revenue minus the expenses. And here's what my net number is to run my household. And here's money I set aside for my business. If I ask most owner operators those questions, they all look at me like I'm an idiot.
Right.
If I ask most motor carriers if they require it, they would look at me like I'm an idiot.
Mm-hmm.
Right? So one of the greatest facts that we have when we do these programs like this is we benefit stronghold to the owner operator, but we also protect the motor carrier, right? By you being in business, truly in business for yourself, and having the right criteria, the mindset is not to go after the motor carrier. The mindset is I'm taking care of myself. It's a much better relationship with the owner app. It goes deeper than just the contract.
Right.
Right? The mindset is I've taken care of myself. I've done what I need to do to stand my business up. No different than a franchisee.
Right.
Right? I sell McDonald's hamburger doesn't make me an employee of McDonald's corporate.
Yeah.
I've stood that driver up to be a self-sufficient, self-reliant, and his success or failure is based on his or her decision. If I choose not to drive, I go out of business. It is not the fault of the motor carrier. If I am poorly insured, it's not because the motor carrier negotiated a terrible contract.
So
The contract that I signed
right.
is because the motor carrier did it. I would tell you that the smartest thing to do is to have the driver go to the motor carrier and produce that contract so he can protect himself. Now, the motor carrier may come back and say, I should do this, but I need these additional things to your contract.
Right.
Therefore, the contract holder is the owner operator. And now when I go in, I can say, well, listen, I've ran my business being able to lay off that risk for insurance, and I've done it for my contract.
Right.
Mm-hmm.
And I can ask the motor carrier if I've had any known losses and provide that to you, and it means something.
Mm-hmm.
Right? The insurance carrier will actually look at that and take it into consideration. So maybe instead of $27,000, maybe it's $15,000 or $8,000. The better the story told, a true story told, by the way, the better perceived you are from an insurance risk. if you have a claim as an owner operator or a small motor carrier of one, no insurance company will ever get their premium back.
Right.
Right? But if you're going to stay in business the next 3 years, if you come to an insurance company, they'll give you a much higher rate. You're probably a safer risk than the next guy. Because you know if you have another incident at fault, you're out of business. Nobody will insure you.
Right.
Or the premium will be so high you can't do it. Even smaller motor carriers run that risk.
Right.
Hey, so we're going to take a quick 60-second break here, Tony. Hang tight. Don't go anywhere. I'm going to pose 3 questions to everybody before I hit the little magic buttons here. The first one is going to be, what's one thing you wish you knew before buying your trucking insurance policy? The second one is, have you ever had a bad experience with an insurance claim and what happened? And the third one is, what's the most expensive insurance mistake you've ever made? I'm also going to pin these 3 questions in the comments at the end of the show and see if we can't get some answers to those, down there in the comments to keep the conversation going. But like always, you guys, at Road Warrior Entrepreneurs, we help trucking business owners protect their assets, grow their businesses, and avoid costly mistakes. If you're serious about taking control of your financial future, join us at www.rwedrive.com. Let's make sure you're covered where it counts, and we'll be right back in about 50 seconds now. You're either running your business like an owner or like an employee, and if you're stuck in that employee mindset, you're leaving money on the table. Company drivers wait for direction. Business owners create opportunities. Company drivers chase miles and just drive. Business owners chase profits and know their numbers. Want to run a real business? Start tracking your numbers. Know your cost per mile and start saying no to bad loads. Drop "I run a business" in the comments if you're done thinking like an employee. If you want to take this mindset shift further, join the Road Warrior Entrepreneurs community at www.rwedrive.com, where we have profit boosting strategies, coaching calls, and real road warriors winning together. And we're back. Sorry about that, Tony.
Yay.
Got to get that that stuff in there, right?
Yep.
Oh gosh. Oh, Ida, our friends. Sorry. But yeah, so if any of you guys have any other questions, definitely insurance related questions, now is definitely the time to do it. Typically we go about an hour on the first segment and split it up into the second segment, but I think this is a hard topic to cover in such a short span. So definitely, throw up any questions you guys have while we got Tony here, because this guy is awesome. And I just look, he's taught us so much. It's crazy.
You like what I did there?
You were, yeah.
I don't have a microphone to zoom in on.
Right.
So I can answer some of these questions that you put up, Charlie.
Right. Go for it,
You
man.
do that real quick?
Absolutely.
So one thing that I wish I knew before buying my trucking insurance policies, especially back when I started, Charlie, I was that guy. Oh,
Yep.
My carrier's got my back.
Exactly.
They got all the lawyers. They've got all the cover. They'll take care of me. No worries. I wish that I had that discussion with. I wish that Tony was around back then to educate me on why that was a bad idea. And most of you that have followed us for a while know what my really bad insurance claim was and what happened. Oh my goodness. So a bad water pump, Charlie, turned into an insurance claim. How has that happened? So I'm on the side of the road. Some company in Reno came to tow me. By the way, I don't know if I mentioned this when I talked about it before. They came with not a heavy rescue record on top of it all. That thing was really groaning just hauling my truck to the dealership. But they tried to lift the truck with the oil pan.
Right.
Punctured the oil pan.
God,
and they were like, man. And Tony, I don't know if you remember this, but I was asking for your advice. I had not changed to Seabright yet. I was in the process of it, and this thing happened literally like a week before my policy was going to get bonded with you guys, get bound
Right.
with you guys. And boy, it was just a nightmare. It took an extra couple of days to get the truck fixed because dealing with, and I'll say it, I will say it, Charlie. Dealing with Swift claims was just a nightmare.
Exactly. It
And
has
it
never
took an
been
extra.
pleasant.
Lucky for me, I was only in Reno, and we had already moved to Salt Lake by this point. So
Right.
Donna just came out. We stayed at the Nugget in Reno for the night without the kids. That was fun. That was nice. And then went home and waited for the phone call. Week and a half later, that my truck was ready.
Right. That was brutal.
And
So, like 18 wheels, he's answering this first question here. He said, I wish I knew sooner that I could get my own insurance. And that was actually, it's in the contract. I'm not busting your testicles here, but it is in the contract, but nobody ever paid attention to it, right?
Mm-hmm.
And we didn't know where to shop for it.
Right.
All right, where are we at, Jeff? Take it away.
And my most expensive insurance mistake was not going with Seabright, like as just the second I was able to get you guys, Tony. It would have made that one claim so much easier.
Right.
So much easier.
And that's been one of the big, kudos and pats on the back that, we hear about the Seabright stuff. And yeah, I'm plugging Seabright. I believe in the products that are here. And their willingness and Tony's willingness and everyone that backs them, their willingness to build, a program and policies that make sense, that cover everybody, not just one side or the other. And going through the claims process is so much easier than the nonsense that I had to deal with my carrier before, be it Swift, be it whatever carrier you're talking about. I have never heard super great claims processes with the carrier's own insurance.
Right.
So with that being said, good on you, sir, and your people and all the people there, because that is probably our biggest pat on the back is the way that the system works, the way that you enforced it and helped people. And I mean, for those of you who don't know and have never had a claim, Tony is typically the guy you talk to first. And the guy is, he never sleeps. He's, taking, calls in the middle of the night because some guy, wrecked his truck or whatever. And he's helping you. He's guiding you through it. He checks on you. He actually worries about us. It's the craziest thing. I don't know how he carries all of it, but he does. He worries about all of us. And then Jeff and I, we'll get the call the next day and hear about what happened. And we're like, man, how are you even functioning right now? You've slept for 22 minutes.
Yeah. And, my business partner, who happens to be my wife, just saying. Can you read that, Charlie?
Yeah, I remember being there for that. And that whole thing was just rough, dealing with all the red tape. That's what Donna said.
Yep. She loves it when I'm home, but she loves it more when I'm not all stressed out over the business.
Life on 18 Wheels said, shout out to Tisa at Seabright. Just saying.
Yep.
I'm not going to lie. Sandy's my favorite over there. But I get in these weird conversations with Sandy because Sandy and I are talkers. I don't know if you guys know that about us, but we're talkers. And I call to do one thing and I end up talking with her forever. I'm going to get her in trouble. Sorry, Sandy.
Never.
It's all good, man.
I love that lady. Like I legitimately have strong love for that woman because of the way she cares about drivers. Some will think that she cares too much and wears it all on her sleeve and probably takes on too much. But I love that woman. I absolutely love that woman. So keep her around, Tony. I'm just saying. Please.
All right. We'll do that for you.
But yeah, like Craig said, these things that Seabright have done, Tony, bring absolute value. And then on top of that, you're better than competitive with most of the carriers endorsed insurance coverages that aren't that well they're flat out inferior because
Well, they
they're
don't even
not
have all the
protecting you.
coverages that Tony put together for the package that
Right.
he's offering. So one of the things I wanted to bring up, because this has come up with people that call Seabright, right? The price of the entire package is one thing, but like Charlie said, look at the value of everything that
Right.
you get for that price. I we know of insurances out there that frankly they are less expensive for physical damage.
Right.
But you know what they don't do? They don't cover the gap.
And they fight every damn claim they get. And
And
I
they
mean
fight every
they're
claim.
fighting you, the insured.
Yeah, we just haven't seen that with Seabright. First of all, they cover the gap if you're in a lease
Right.
truck, if you owe money on the truck. Second of all, I haven't heard anybody wrestle with you, Tony.
We
Nobody's
haven't had
wrestled.
very many.
Um,
The
I'm sure.
carriers that we utilize,
Mhm.
I will say this, the agency is one thing, but it's the carriers that we're in partnership with that provide these products. And it's because
Right.
we've been in this business for a while. Maybe it's because we have firsthand experience. Maybe it's because we're on the risk for the same thing that you guys are doing. I'm just later in life. But what I have to really throw my hats off to is the carriers who allowed us to build products that don't exist in the marketplace
Right.
to make a much stronger contract for the owner operator. That is crucial. All this is just talk if you don't have a carrier to back you and understand what you've done. That accident expense, we didn't cover it today in this conversation, but I'm going to tell you, as a driver and you're out there and you get in an accident and you got to start worrying about the logistics, how to
Right.
get out of the hospital to a hotel and then find a hotel. Do you even know where your truck is? Help you find that truck, get you back out to that truck, then get you home. I mean, that's crucial. It costs virtually nothing. The minute you need that coverage, even if you had the money in the bank,
Why
would you want to get
You have
rid
the
of it?
coverage.
Yeah, Tony, definitely deep dive into this one because this is one that came about because of a claim that we had a couple years ago in Atlanta that
Mr.
left the
Ralph.
driver stranded and injured and permanently injured in life. So you definitely dip
Yeah.
deeper into this one if you wouldn't mind.
Yeah, so this policy came around because we had a driver driving in Atlanta and in a 5-lane highway in the center lane, an idiot came up and hit the steer wheel on the passenger side, hit it so hard it broke the tire off the truck, caused the truck to turn left and drive straight into the embankment in Atlanta.
Right.
Total destruction. It destroyed that truck. He was taken to the hospital. The police were, there when he got out. Oddly enough, and they said, "Look, dude, it's 2:00 in the morning. You got a room? Have you booked a room?" He goes, "I don't even have a credit card. My wallet's still in the truck."
And there was a
And so
Taylor
the
Swift
police
concert
officer
going
took
on
him
that
to-
weekend.
Yeah, and so the police officer took him to a hotel, and when he got in, trying to get a hold of his wife, turned out to be a fiasco.
Right.
So he just slept in the lobby. He then called me the next day and said, "How do I get home?" I said, "Well, what's your agreement with Swift? What does Swift say that's going to happen?" And Swift's position is probably technically correct. You are in self-employed, and it's your business model that should take care of that incident. That's probably honestly correct. He didn't have it. Nobody had it. So we went to a carrier and actually negotiated an accident expense, and it's part of the package, and we mandate that you have it. So when you get in that position, we'll now get you an Uber or a taxi, get you to a hotel. We'll pay for your hotel. Next morning, if your truck isn't going to be serviceable, in this case it wasn't, most cases it's not, it was in an accident. It has to be repaired. But we'll get you another night's hotel, we'll get you an Uber to and from, and then we will book your transportation home, or at least reimburse you or prepay, whatever's to the best of your situation.
Mm-hmm.
Right? And in this case, he didn't have the money, but his wife would have went down there had he had the money. So we'll actually pay a spouse, a parent, or somebody to come and get you home.
Right.
Right? I mean, it's one thing to have an exposure and an expense. It's another thing to have an exposure that's always yours.
Right.
And in this case, we protected the business, right? And that's what this policy should do. It should get you home. It should get you to pick up your stuff. It should take care of any running around you need to do. There's a lot of work that goes behind an accident with a truck. A lot of the exposure belongs to the motor carrier, because if you got a load on, they're going to want to take care of it. They're going to want to get it out of storage.
Right.
Right. So they, those things, because they have a vested interest in the truck, they don't have a vested interest in the driver, because he's self-employed. So either you've got to do it, or you pay a small amount of money to cover the incident. So when it happens, it's the phone call I get at 3 a.m.
Right.
Right. And it lessens the blow. It's already a blow. When you have an accident, there's no good feelings going on. I can tell you. I've heard them too many, too long, too late.
Mm-hmm.
So when we can take that off your plate, it just makes the whole incident much easier. So I think when you start negotiating your insurance and you're a first time or a second time or a third time, give it a call to us to walk through it. And listen, we may tell you to stay with the carrier. Maybe the best deal ever. That may happen. It doesn't always have to be us. And then you may find somebody else that gave you a great quote. We'll tell you that. So just that peace of mind may be worth it to you. Yeah. But if we open your eyes to everything that you should be looking for, and if you find there to be a void, how to fill that void is crucial. And so I think that's what sets us apart from most people. We continually bleed this truck all over everything. And our job is to make it each and every day that the whole experience, even though it's a bad experience, just because you wrecked your truck and got injured, or just wrecked your truck, or maybe you just got injured. If we can improve that process,
right,
by standing between you and the carrier to get things moving, to take care of the paperwork, to help you with the paperwork, to make sure you don't sign the wrong thing, make sure that you don't put down the wrong thing. Right? Because we want to make sure that you understand you have occupational accidents most of the time, not workers' comp. You should know that. You should know the difference. The day of the accident is not the day to learn. You may learn because of the accident, but our job is to make sure that the hospital will take the coverages,
right,
to get it approved, to get a claims number, help you through the claims notification process, If you speak Spanish and no English, we get translators. If the carrier don't have one, all of our carriers now speak Spanish. So
Nice.
that has become almost a nothing burger, but
And-
there for a while.
Yeah. I mean, with okay, just on the language thing real quick, because, let's be real. It's a hot topic right now out there. Some people are fluent and good at English. That's not their primary language. And when shit hits the fan, sorry, Donna, people want to speak in the tongue that they're comfortable with. Let's be real, right? Because
Well,
if I
when you're dealing with legal stuff,
right,
the comprehension level needs to be really
Yeah, there's-
high when you're talking about this stuff.
nuances to words and things like that may not translate. Like Rosie's been speaking English, basically 50 years, right? But it's her second language. Nobody ever believes that, but it's her second language. So, but there are still nuances in the way words mean certain things in English versus Spanish that it's hard to translate in your brain sometimes. And then it turns into Spanish. So just to touch on that, real quick, Tony, I'm going to bring Tim Saburn in, if that's okay. He had something about invoicing and a corrected COI. I'm going to take his call here real quick and bring him on the show.
Cool.
Tim, I think you're here, buddy.
Hey, what's happening?
What's up, man?
There he
All
is.
right, drop it on us.
Not much. Tony, just want to say thanks so much for taking time out of your busy day to address a lot of things. A lot of good information on behalf of myself and the tens of viewers.
Yes.
Just thank you so much for your time.
Well, thank you.
Wanted to just talk about Sandy's a great lady to work with. She's really great, and it hasn't happened to me, thankfully. But I'm hearing where a lot of the contractors' corner guys are getting billing errors and invoicing errors with kind of wacky amounts, and I know apparently it's been happening since the end of last year, actually, and it's like, wow. Kind of interesting, but I wanted to bring that to your attention.
Yeah, so we're fully aware of it. We changed processors that handle the payment. And so they, for security purposes, make drivers change their code so that it's harder to break into. And so when drivers have done that, they get behind. So the payment, let's say the payments, you're on a once a month, and I don't know what the date is, but let's say it's the 15th. Well, on the 20th, they're trying to catch up that 5 or 10 days that hasn't been. That system is trained to do that.
Okay.
So I think it was the 5th of March, you'd have to ask Mary, but we stopped that. Now it's manual invoices until we can get that software. Software has no brain, right? It just does what you program it to do over and over and over
Garbage
again.
in, garbage out.
Yeah. So, and and there's nothing wrong with the processor. It's the script that monitors the transactions. That's the problem. So as that script gets rewritten, and now we haven't announced it, but you guys will be able to go into your own secure website and storage for data called PIN. It will eliminate all your problems because it gets you insecure. You will be able to go in and make the payment in your own site. And that will be coming out very shortly. And that will eliminate all these billing issues.
Right.
Gotcha.
The other
it hasn't
issue
really happened to me, but I'm on the automatic payment plan, so.
Well, yeah, and that shouldn't ever be a problem. And listen, we cause a lot of this ourselves. When you guys get behind, we work with you so that we don't have to cancel the policies.
Right.
So we're working together with you, but the system doesn't see that, and you can't program it to think. Right. So it reacts, and so the system, we can't pause it. And so we came up with the idea if we could interrupt it, that would work. That also didn't work because the AI is what drives the whole mechanism for the carrier to know that you're supposed to be insured and not canceled. So we just eliminated the entire process except for the automatic pay. And we will have it corrected. We were close yesterday, and there was a couple glitches that we had. But those programmers are fixing that, and within a couple weeks for sure, all that will go away.
And Tim had a second issue.
The one that caught me off guard is the the COI. So tell me what the COI problem was.
Well, I am curious how important a 100% accurate COI is. I found out when I went to take advantage of my windshield coverage. It turned out to not be a big deal. We just had to, it was just the idea of the adjusters and different things trying to track everything down. But my VIN number on my COI was 1 digit off on one of the numbers. And so it took a while to kind of figure out which error was what. And it turned out, well, the COI had the error. And I haven't gotten a new COI as of yet, but just curious, how important is that?
It is important. So let me tell you what happens. The first thing that's important, you're a Swift driver?
Independent contractor, but yes, leased with them.
You're leased on, perfect. So you provided us with a lease agreement and an equipment agreement.
Right.
Yes, yeah. My truck's paid for, but I do have you all.
Yep. So those two numbers that are in those agreements are the ones that's crucial. So if we make a mistake on a COI, that's nothing, because all the carriers have that agreement, and that, as long as Swift didn't make a mistake on that, you're fine. Even if both parties made a mistake, if you've been paying premium on the truck that you solely drive, it will be paid in your favor.
Okay. Yeah, I just didn't know how important it is that my VIN number on my COI is the right one without any digits messed up. If that makes sense.
Okay, send Charlie a text, or Charlie, you can send him my cell phone number and he could text me.
Okay.
And I'll pull that account up, Ken, first thing tomorrow morning. I'll have a CAI sent to you by 10 o'clock in the morning, 9 o'clock.
Hey,
I'll make sure that it's correct.
Yeah. I've got a question for you.
What's
that? Do you have in a secure location a driver's file on yourself?
Nice.
That's something else that's been brought up on the show. I completely, understand that. As far as I would obviously need a solid list of what that comprises of. But I mean, I do have a desk drawer, a drawer that I keep my articles of incorporation from my LLC. So I could definitely keep it with that stuff, but definitely, having a list put out to say, hey, this is the kind of things you need. And I remember it was brought up a couple months back. And but yeah, but the short answer is no.
Okay. So Tony, there's your opening for another feature of Tim's right there.
Yeah. So one of the things that we'll do in this is we'll create a driver file that's DOT compliant, so that the motor carrier is not in violation, because both the motor carrier and you, and nobody requires in the business model for many leases that I've read that you have to have a driver's file. But if you talk to any DOT officer, and because they walked into our house, pulled out our file cabinet and said, if I can open it with this screwdriver, you're in non-compliant.
Right.
Okay. So we want to correct that for all of our drivers. It's been a mission since August of last year when this event happened. And as I told Jeff and Charlie today in a prior conversation, my guess is very few drivers are DOT compliant.
Right.
Yeah.
So in this software, you're going to have the ability to build a DOT compliant driver's file on the cloud and just have it all right there.
And you can access it from your phone, your laptop, PodPad, whatever you got.
Cool.
And all your insurance certificates will be in there for you, and all your insurance policies will be in there.
Yep.
Sounds good.
So all your certificates and everything.
So, yes. And so one of the other things that we have in there for you is you should have a business plan. We should start that as well.
Right. And it's just
Go,
gonna
Charlie.
be all nice in one place where you can access all of it. You know, copies of your driver's license. I mean, all of these things. You know, your insurance certificates. You know, what happens when, heaven forbid, the truck burns up and all your documentation goes with it, or your house floods and it's floating down the road. Just saying, could happen.
So I could tell you that mine is in a fireproof safe in my bedroom.
Right. Mine was not when this flood hit. Legitimately.
Oh, really?
I got lucky.
No.
It was high enough though.
Oh, thank goodness.
Yeah.
Darn.
Yeah. Oh, it was a thing.
So we
So Tony,
so we would do all that for you, Kim.
Oh, okay.
Lisa's getting tired of us.
No, Lisa's good. Every week I get a 10-minute warning from Lisa. It's awesome. Yeah, so 10 minutes left, guys. If you got any other questions, please throw them up. Tim, did we cover what you need to get covered, buddy?
Yeah, I think so. I definitely appreciate it.
All right, man. Thanks for calling, dude. I'm going to throw you back down and feel free to hang out there or come back to the live show, whichever you prefer. You'll be able to hear it if you're whatever. Thanks, man. I'll talk to you soon. I already sent you Tony's number.
Yep. Okay. Appreciate it, buddy.
All right, buddy. So, yeah. 10-minute warning like that.
So tell Ken if he's still listening, I'd be sitting at my desk till about 11:30.
There you go.
That's Central Time, guys. Central Time for Tony.
Yeah, Central Time.
Central Time, yep.
We call it Tony
And I'll
time.
be back at my desk by 5.
Yeah. For those of you who didn't catch that, he works till like 11:30 and he's back at work at 5. Just saying. It's insanity. So yeah. Did we miss anything, Jeff?
So there's kind of a debate going on. There's people that are pro Sandy and there's people that are pro Tisa.
Right.
And they've been kind of battling it out in the chat.
Look, I honestly haven't dealt with Tisa. I think I may have spoken with Tisa once. Sandy's my lady. I'm just saying.
I like them both. Tisa is fluent Spanish.
Nice.
She is. Yeah, she is.
You're gonna make me sing Lionel Richie, aren't you?
Yeah.
No.
Nobody wants to hear Jeff sing.
They both have their strong points.
Yeah. So, look, you know, we've talked a lot about Swift and that thing. Just so everybody understands, this insurance coverage isn't just for Swift guys. It's if you know you're an owner operator out there, you're a carrier even. There's options for you. You know, give Seabright a call. You can call them at 800-366-6466. And see what kind of rate they can build for you. And like Tony said, you know, they may tell you, hey man, you got a better deal than we can pull. There's no harm, no foul there. And they will absolutely tell you, you know, we can't beat that or we can beat that. And I can tell you that even if they're close, like we mentioned earlier, if they're close, like for all the Swift insurance that they have, the 3 basics, I have all of the other coverages that Seabright offers, with the exception of personal expenses. I know, Tony, stop. Don't even get me started. I'm not triggering you, sir. But with all the other insurances that I pay for, I'm still $200 less than what I paid for 3 of the coverages at Swift.
Yep.
That's OCAC, physical damage, and bobtail. And I paid $200 less. I have way better service in the event of a claim. I have way better coverage. I'm protected. Swift's protected. Everybody's protected in the right way. And I have someone who's fighting for me, not just for them, and telling me to pound sand. We covered what they wanted, and that's it, because it happens every day. So I really want to stress that.
Yes. So, yeah, I'm excited for all the people that come in, and for those who leave. I understand. I still get calls from guys who have left Swift, went somewhere else, and they still call, say hello, ask me to read things, and we will still do that. If that's, I enjoy servicing these guys. Most of the clients that we have are fantastic, and for those that are cranky and always want to tell us what's going on, it's hard to help, but by God, I try.
Oh man. Amy just popped up and dropped us $10, Jeff. And he said in a super chat, he said, Swift insurance is crap. Thank you for finding us better insurance. Amy, love you, man.
Yep.
Life on 18 Wheels, who actually was a Swift contractor, went to Landstar, still has Seabright. Has a quick question. Real quick, what services are offered if I plan on expanding, becoming a carrier, Tony?
So for that, call the office and I'll walk through what you should look at before you make that leap. So let's have a personal conversation and walk through the options that you have and how to get to the right decision. So let's and don't do that on the air. So let's have him give me a call privately at the office.
Okay.
And he can call after hours on my cell phone. I'd be glad to talk to him.
Okay. Otherwise, he can call the 800 number.
He can call the 800 number and be transferred to my phone.
Right. Life on 18 Wheels. I don't believe Seabright's going to be at Matt's. Everybody's asking that. If me and Jeff are going to be at Matt's, Seabright's going to be at Matt's. I believe the answer is no. Tony, you could clarify that.
I was not planning on it this year.
Yeah.
Should I go?
I don't know. Isn't it like now, next weekend, this weekend, something like that? Good luck.
Yeah.
Yeah, I'm not this weekend. I'm going to see my 93-year-old mother. Nope.
Oh,
got to do that.
Right. I got to plan a trip to see my mom, I think, next month. Again, I'm going to try and get out there every 2 months now. That's one of the things I'm doing. Anyhow, it's next weekend. So, all right. So Life on 18 Wheels, you can give that 800 number, call 800-366-6466 and ask to speak with Tony. Or if need be, if it's after hours, man, reach out to me and I can get you a cell number. Not putting it up on the screen because Tony, you should see all the calls this man gets. It's insane. It is unbelievable the way that he moves. And Tony's like 100. I mean, his mother's 93, but Tony's like 177. Okay, for those of you who don't know, love the guy, and I only wish that I had the stamina he seems to have. Hell, I wish I had it now. Let's just be real. I mean, normally I stand through show, got the stupid migraine, got a shot. I had to sit down the rest of the show, but whatever. But yeah, so seriously, reach out to him. Life on 18 Wheels. Let him know what your real name is, DeVille. And we will make that happen. Tony, anything you want to throw out here before we wrap this thing, man?
No, I think we're pretty good. I think you ought to announce pretty soon our little contest and see what we can get.
Yep. We're definitely working on that. I know I need to reach out with you and Mary, and we need to finalize some stuffs, and then we will definitely be getting into that. That's going to be fun. Just here, we'll throw a little teaser. Hey, if you've got dash cam footage that you own, guys, it must be your own dash cam footage of a four-wheeler doing stupid things in front of your big truck. We've got a way that you may be able to win some money coming very soon. and it's going to be a fun contest. And so make sure you're saving those crazy four-wheelers out there doing bad or crazy stuff. We're going to be asking for you to send them to us eventually. We're going to give you a way to do that. And hey, it could win you some cool stuff. With that being said, Jeff, final thoughts?
You know what I'm going to say. Keep that
Make it
rubber
happen.
side down, and with no action, there is no traction.
Oh, here's a quick one. Quick
Charlie.
testimonial. Swift Insurance is offering him 1090. This is from Don. Hey, me. Swift Insurance is offering him 1090 on his 25 Western Star without gap, and Seabright 880 with gap. There you go. All right. Definitely. We will be here next week. And excuse me. Next week, the mental game of trucking, staying motivated and avoiding burnout. How your mindset separates successful trucking entrepreneurs from those who struggle. Strategies to stay focused, avoid fatigue, and maintain a work-life balance. Work-life balance is a tricky thing for us. We'll talk.
I will have some things to say about that.
Exactly. I know. I knew when I said it was going to be a thing. Why building a strong network can help trucking business owners thrive. With that being said, you guys take care of each other. There's no one out here looking after us but us and people like Tony and Trucker CFO and, a couple others, ES Success in Trucking. Love those guys too. But we will be here next week, Tuesday, 6 p.m., guys. Hopefully I won't have a migraine that time. And be safe, everybody. Tony, if you want to hang out just a minute, we'll catch you right after this thing ends.
All right.